Good morning. I'm Pete Najarian. This is the take on this Tuesday morning. It's a beautiful sunny day outside. Markets look a lot different than they did yesterday. As a matter of fact, yesterday, absolutely terrible start to the week. And you look at that first half of the day and the market's just absolutely getting creamed to the downside. I guess the bad part about that is even though the Dow was already down 500 points, give or take, and kind of flatlining within that area, it just got a little bit worse. Towards the end of the day, we finished off 653 points on the Dow. That was a 2% move to the downside. NASDAQ, even worse. And we've been talking about the NASDAQ in terms of the little bit of a dislocation in the big picture, the big scheme, whether you look one day, 1 week, whatever, and you can see a definite difference in how much more that's been getting hit. That was down over call it almost 4.25% yesterday when it was all said and done. Down 520 points. You also had the S&P, a 3% move in the S&P. You don't see that very often. Actually closed near the lows, down 132 points. So across the board, market's not looking so great. Crude started off the day pretty strong, but dipped almost as soon as we got into the trading session. Also, take a look at Bitcoin. Bitcoin has been getting absolutely slammed. It's been cut in half from those 52-week highs. 68,000, more than half. And as a matter of fact, kind of wavering around between 31,000 and call it maybe 32,000, give a little bit of extra to the upside, 33,000. But it has not been looking very pretty of late. There's no doubt about that. The volatility index, a lot of people asking questions about the volatility index yesterday. I can tell you, it's never been an absolute perfect science. It's a movement of the markets. It's the S&P move. It was a 3% move. We haven't seen a lot of 3% moves, but we certainly did close near the highs of the session. We were somewhere between 32 and call it upper 35s, 35.50 or so, but closed out actually at the end of the day, closer to 33. So yes, it's just above what would be about a 2% line. Let's just remember that was yesterday. That was one day in this big scheme, this big picture of what we've been seeing. So let's always try to remember that. And as I pointed out last night on Fast Money, for anybody who got a chance to watch that, the VXN was the one that was interesting. That's the volatility index of the NASDAQ. You take a look at that. You had the highest close in 1 year, not this year, in one full year, the highest close for the VXN. A lot of people just get so focused. Everybody now is an expert, by the way, on the VIX. I'm not so sure that that's true either. But you look at that VXN, you close over 41. That's a pretty big statement. Go back, take a look at the charts and look at that NASDAQ volatility index. I would encourage you to take a look at that. So crude dropped. It was right around 102, 103. The interesting part of yesterday was the 10-year and the 10-year movement as well. So you look down and you see a lot of different things moving around. But energy, you talk about the price of crude, also add into that nat gas. Look at energy. Energy was down yesterday by far the most of any of the sectors, down 8% yesterday. Only one sector actually finished in the green yesterday. That was, you know it already, staples. But outside of that, you've got energy down over 8%, consumer discretion down 4.25%, technology down about 4%, materials, financials, industrials, all down 2.5% or more. Gives you a bit of a flavor of the day that, for the most part, nowhere to hide, except a little bit of action yesterday that kept the staples in positive territory. As a matter of fact, you look over at Stanley Black & Decker, that was pretty strong yesterday. Throw in Campbell's Soup, sounds like a little bit of a staple there. Smuckers, JM Smuckers, another one, sounds like that. Clorox, CLX, that's another one. And then throw in some of the other names, Walmart, Home Depot, actually even throw in 3M, which I thought was pretty interesting. A lot of different products within 3M, of course, but interesting to see that was as strong yesterday as it actually was. A lot of negatives yesterday across the board. We talked about energy already, but those beta energy names, they're going to move even faster to the downside. That's exactly what they were doing. Always remember that, because everybody just views that as, well, these beta energy stocks, when they go up, they really go up. Well, that's true, but they also go down at a much faster pace, hence the beta. So Apache, Marathon Oil, Devon, all those kind of names. Throw in Chevron for the big caps. That one getting hit pretty hard yesterday. Then the Oktas, CrowdStrike, Airbnb, Lucid, AMD, Boeing, you get the idea. And throw in mega cap tech. When you've got Microsoft getting hit, Salesforce getting hit, Apple getting hit, Tesla getting hit, all of those names, you are going to have a significant move to the downside like we did, and about a 4% move or more, actually, when you're looking at the NASDAQ. That was a pretty monstrous sell-off day. A lot of put activity yesterday going on in a lot of different areas tied to the NASDAQ, but primarily in ETFs yesterday, not individual names. A lot of ETF, a lot of the Cathie Wood ARC ETFs that we were seeing a lot of put, but they've been there. It wasn't that yesterday was the first day that they started pounding on that. They've been there now for the last 2 weeks or so. And a lot of what we've been seeing in those ARC ETFs have been rolls down. They had successful trades for downside. They want to continue to be there, but take some money off the table. Those are smart traders because that's the disciplined way to move and navigate throughout these markets that we're in. So we come into today, we got a little bit of brightness. We got a sunnier day outside. We also get a nice bounce. We're up 250 points on the Dow, 200 points on the NASDAQ. For the most part, we've been moving a little bit higher, a little bit lower, but somewhere within a range. The NASDAQ 200 to 300. And I look over at the Dow somewhere between 200 and 400, maybe 450. But just before I came on here, Dow was up about 200. NASDAQ was down up about 200. I'm used to saying down. Both the NASDAQ and the Dow up about 200 points. And then you look over at the S&P up about 40 points or so. We are now under 3 for the 10-year. I look over at the crude, still trading about the range where it was, 102, 103, somewhere in there. Look at volatility index, though, kind of hanging around, even with this big positive start to the day, hanging around between the 32 and call it 33. And then Bitcoin. Bitcoin's been bouncing around. It's been very, very volatile, very much like the markets themselves. And that's been hanging around. So call it somewhere close to 32,000, been up or down throughout that area. So every sector today early was in the green. Every single sector. So a little bit different picture than yesterday. Consumer discretion was leading early on. Technology was very strong. Energy was decent, but it was a little bit lower down. It was down under 2%. As we get into this day, energy has exploded a little bit higher. Last I looked, it was up about 3%. Technology kind of staying about the same. Consumer discretion actually pulling back a little bit from being up 2.5% to a little bit over 1.3%. So giving back a little bit of that. That's partially what we are seeing reflected in those major indices. Materials also pulling back just a little bit. Financials also pulling back just a little bit. So that gives you a pretty good sense of what's going on in those markets. By the way, as a news story today, I think one of them that was pretty interesting was in Tesla, actually, where they had to shut down that Shanghai plant. And the reason being that they are having a hard time securing some of their supplies. So some of their parts, that's an issue. That's something I think we'll all be keeping a fairly close eye on as well. Cruise ships, strong. I take a look over at Carnival, Norwegian, Royal, all of those trading pretty nicely early on. Mosaic, in terms of the ag side of things, looking pretty strong. Etsy, which has been under pressure a lot of late, actually in positive territory. Palo Alto Networks. I throw in Datadog. I throw in CrowdStrike, Adobe. A lot of the names that have been getting slammed are a lot of the names that we are today seeing a pretty decent bounce. Throw in Disney to add something else to that. Beta Energy also throwing to the upside. And then, of course, the mega cap tech names all moving to the upside very nicely. Apple and Amazon and Tesla and Microsoft, Google, Netflix, all of those positive territory today. What wasn't really working out so well is names like Moderna. I look over at Peloton. Now, this is a name that we've talked about for a long, long time. And it's interesting because I do have one of those pretty long memories, actually. And I remember getting vilified for being a guy who was not on the Peloton bandwagon because during the pandemic, everybody's buying Pelotons, putting them in their house. I've lived through multiple generations of this through my family. I've seen this play out, and it's not just my family. We've probably all seen it, where mom and dad buy these things and they never use them. They become a clothes hanger. Everybody's drying their clothes on them. They're hanging stuff up on them. It's exactly what played out once again. And people are very social. And why do I mention that? Well, because people want to be in gyms. All you've got to do is look at this. Look at the Peloton numbers. Look at the Planet Fitness numbers. After you look at those, I think that tells the whole story. And that was what we were trying to convey. I was trying to convey to a lot of folks as we were in the pandemic, as some of these stocks were just absolutely ridiculously running to the upside, as if everybody will always be in that category. And it's something that's been playing out. And at some point, they will see a bottom, but the stock has really been under some unbelievable pressure. By the way, we've got, speaking of that, let's take a look at the charts. Let's talk to AJ. Let's talk to John. You get that opportunity tomorrow. That's going to be a lot of fun. Right at the market close, John and AJ are going to get together. They're going to be dissecting everything from what they see on the charts to what John's seeing in the options activity that's along with that, and then see how that all fits together. I think you're going to really enjoy that. You're going to have to sign up. It's free. It's a great webinar at the market close tomorrow. Take a look for that one. That's going to be a lot of fun. I think a lot of people are going to be able to learn a lot too. As AJ has been so right on so many things that he's been pointing out through the charts, that I think that's something that everybody really should take the time to pay attention to see what's going on there. That's going to be a lot of fun. Got two unusual names, and then I'm out of here. Pepsi's number one. Stock was trading right around 174.30. We had a buyer of a little over 2,000 of this Friday's expiring May 177.5 calls. These are just a little bit out of the money. Will the stock make that kind of a move? They're paying premiums of 51 cents up to 81 cents for those options for Pepsi to make that move by the end of the week. That was number one. Number two, Under Armour. Now, this is a name that got absolutely punished recently. We hopefully had a chance to see why and all the rest of that, but maybe it was punished a little too much. At least somebody thinks so. Stock was trading about 965 this morning. They had a buyer of 3,200 of the June, buying a little bit of time, the June 10th June 10 calls that are 65 cents. So you're getting a little bit of time on your hands. It's not sticking to May. We're going out to June and looking for the stock to make a bit of a rebound off of that. We'll see how that plays out as well. 3,200 of those being bought today as well. We started to see a nice return of the unusual activity, which started off a little bit slow early on. As we got a little bit deeper, the first 30, 40 minutes into the day, just before I came on here, we started to really fill up with a lot of unusual option activity. So pretty excited about that and some of the trading that we're going to get to. And I want to get to that trading right now. So folks, have a great day. Be safe, be smart, and understand the derivatives markets. If you don't, make sure to get educated, whether it's here, online, or whatever. But you've got to know what's going on in the derivatives markets. As I mentioned, those volumes yesterday, pretty impressive. When you look at 45 million contracts trading yesterday, again, that's big numbers, and that's what May has brought us. April, we got a little bit light. May, we've gotten right back on track to the year-to-date type of numbers. Folks, have a great day at trading.